So the amount that you're going to be paying monthly for your mortgage depends on how long you've set the mortgage term for. So the typical minimum term for a mortgage is 5 years, and a maximum with some lenders, depending on your age, up to 40 years. So the longer the mortgage term is, the cheaper the payment's going to be, and vice versa. On a shorter term, you're going to be paying more on a monthly basis. However, the shorter the term, the less interest you'll pay back overall. Now, typically, first-time buyers might do a longer mortgage term because it's the first time they've experienced having such a large monthly outgoing. But as the years progress and your mortgage gets reviewed on a regular basis, you want to be looking to try and pay a little bit more to shrink that term and pay back less overall. Now, each monthly payment consists of capital and interest on a repayment mortgage. So that balance that you start with is coming down month after month, year after year. In the early years, it's mostly interest that you're paying. So those first few years annual mortgage statements that come through make for really depressing reading because you're paying this monthly payment and you're only seeing the balance come down very, very slowly. The good news is, in the last 10 years or so of the mortgage, that situation completely reverses. Your payments will be the same as long as the interest rate is the same, but more of that monthly payment is going towards capital. But eventually you get there, you get down to zero, and the house is yours, owned outright.